What's going on, everybody? Liam O'Reilly, Vermont Economic Realtor with Jerry Riley Real Estate. I hope you're doing well. New listings are up for the first time in about 18 months nationally, but they're not up in every market. We're going to talk about how concentrated new listings are in some markets and what other markets are experiencing as far as their new listings go. Also, about 7% of homes on the market, 7% of listings dropped in price in the 4 weeks ending in October 22nd. Now, that 7% number is the largest number on record, according to Redfin. Now, I don't believe this includes the Great Financial Crisis, but I think post Great Financial Crisis, this is the largest share of homes on the market that have experienced a price drop. And if you've been watching my videos for the past few weeks here, you know that I talk about how sensitive the housing market is right now, where at least subjectively around here in Vermont, home prices, there are homes that are still selling for well over list price. But if you don't price your home accurately, if you price it a little bit too high, if your home's worth 650 and you list it at 700, you're going to be forced to drop that price because buyers are really sensitive right now with where rates are. But if you price it attractively, if you are able to generate a lot of interest within that first weekend, you can still get multiple offers. And we're seeing lots of sellers get multiple offers even in this competitive market. So let's get into the national data here. Before we do, if you are interested in buying or selling a home anywhere across the country, all of my contact information is in the description. Reach out to me directly. I would love to help you with your search. And let's get on with the video here. So, Redfin kind of cut off there, but housing market update. Buyers get some relief as new listings finally increase. More sellers drop prices. So, first line here. New home sales rose by 0.3% from a year earlier during the 4 weeks ending in October 2022. A small increase, but the first since July of 2022. So almost 18 months here. New listings have been decreasing. There's been less homes for sale month after month, year over year, for 18 months. And now we're starting to see a slight uptick in the year over year data, which is a big step. Here we go. Right at the end, then this is the other part of the article that I mentioned at the beginning. Declining affordability has led to price adjustments. Roughly 7% of U.S. homes for sale had price drops during the 4 weeks ending in October 22. The average, or on average, the highest share on record. Again, on record, I believe, post Great Financial Crisis, post 2008. Now, piggybacking off of those price drops, off of those incentives, look at this. Almost a third of homes for sale are new construction, the highest share of any third quarter on record. So, new builds are taking up a growing share of the pie as builders attract buyers with concessions, surging mortgage rates, and prevent existing home owners from selling. And we have this chart here that shows the drastic increase in market share of homes for sale that new builders are taking up. Now, something I did want to mention, and I didn't have time to pull up the article for this before making this video, but most of the new construction is in the South or in the West of America. The Northeast has very little new construction, and so does the Midwest. The Midwest actually doesn't have a whole lot of new construction going on, but down south and out west, markets like Vegas or Austin, they builders can just really expand in those markets. So although new construction takes up a larger share of the overall housing market, if you're in a market like Vermont, there's still not that much new construction available to buy. Now there is new construction out there, but it's not going to be the same market share as you see in some of these other western and southern states. Now, piggybacking off of new construction in relation to the 7% of homes that saw price decreases, price cuts. Now, I'm sure a bunch of those price cuts are with sellers, are not with home builders. We're seeing that a bunch around here in Vermont. If people price their home too high, the market reacts by not bringing any buyers into their property. Nobody's interested. They're not able to get the price they want. All of a sudden, after a couple weeks, people are slashing prices, and people are slashing prices aggressively. People are home sellers who are motivated and want to sell. I've seen some price cuts of around 10% of list price recently. So at the same time, the market is very sensitive. If you price your home accurately, you can get multiple offers, but the sellers that aren't, they're cutting their prices drastically. And I think, so circling back to that 7% number, I think some of that 7% number has to do with how many homes being sold right now are new construction across the market. Because home builders, they do not want to hold on to this inventory. They don't want to have their cash tied up. They got to get rid of this home. They got to get into their next project. They got to keep things moving. They got to keep their people busy to stay in business. Now, it's really funny. And they're willing to take a haircut on their profit in order to keep the ball rolling, right? Sellers are more emotionally attached to the price of their home, where home builders, this is a business for them. It's less emotional, and it's more about how do we survive as a business. So it's funny. I was watching a news article from 2008, or not 2008, from the 1980s the other day, where the 1980s, in my opinion, is a very similar time period as far as the housing market to what we're experiencing now, where interest rates were extremely high, inventory was extremely low, affordability was extremely low. Almost nobody could afford to purchase a property with these 20% rates. And what home builders were doing is they were doing a lot of the same things that they're doing now. They're offering incentives to buy down properties, or to buy down people's rates. They were cutting their prices to be more competitive. And at that time, builders were saying, look, we just got to we got to keep the ball rolling. I'm not even making money on these homes, but I got to keep my people in business so that when we pull out of this, I have a business to rely on. My employees have a place to come to work so they can get paid. But basically, they're just churning out this money, making enough money to pay their people. And then from there, they're just selling the home and moving on to the next one, and rolling everything over. They're not even taking that much of a profit. At least that's what was happening in the 1980s. And I think we're going to start to see something similar happen today. But anyway, moving along, long tangent, moving along with the rest of this market update from Redfin. So rates around 8%, no surprise there to anybody. Mortgage purchase applications seasonally adjusted down 22%, the lowest level in nearly 30 years. There's almost no buyers out there looking to purchase property. So there's no sellers, there's no buyers, there's not many sales going on, right? The few buyers out there, some of them are still competing for the little bit of inventory that is there, the scraps, if you will, of homes out there on the market. I mean, there's really nothing for sale, and there's a lot of buyers waiting for rates to come down as well. So sellers are feeling it if they list their home too high and they're cutting rates because nobody's coming to the table to buy their home. Buyers are feeling it because they're going out to search and they're saying, where are these properties? Where are the homes that I can buy? There's not much out there. Now, Redfin Homebuyer Demand Index, I thought this was interesting. This is a measure of people seeing homes through Redfin. That was up 4% year over year. So mortgage purchase applications are down. Home buyer demand is up. And now this, I think, is because rates, if you remember, in 2022, they were at 3% at the beginning of the year. And then they skyrocketed up to 7.29%, it says right here, this time last year. That shocked a lot of people, and that brought a lot of people out of the market. People thought rates were going to come down more significantly this year, which of course they didn't. And so people stopped looking for homes. So this 4% increase year over year in home buyer demand isn't too surprising when you think about it, even though rates are higher. Because even though rates are around 8%, they rose from maybe 5.5%, 6% that we are experiencing throughout most of this year until these past few months, where they've gone up to 7, 7.5%, and now close to 8%. So that's about a 2% change as opposed to a 4.5% change. So a little bit less of a shock for people out there searching for a home. Now, Google searches for homes for sale down 12% year over year. The month over month data, that makes sense. Home buying is seasonal, but the year over year data, that is very significant. Now, median sales price here, this is what I was just talking about with the interest rates this time of last year. So when we look at median sales price, we see that it's up 3% year over year. You got to really take that number with a grain of salt, because this time last year, rates were peaking out. So people that were had their 3% rate in January of 2022 and were still looking for a home, now they're looking at 7.33% rate, and they're like, there's no way we're going to pay that. So the market really took a hit this time last year. And so even though home prices are up 3% year over year, that doesn't mean they're rising. I think they're staying flat. If we look at the data, that's what the chart seems to show. And if we look at this map by the New York Fed, that is what this map seems to show. This is a map of the monthly change excuse me, the year over year change in median sales price across the country. You can see the more gray, the more tan, the larger the decline. So we look here. How do you say that? Thule? Box Elder minus 7% year over year in Utah. We have 9, Nevada, down 5.4% year over year. So those are the counties where home prices are declining. All this blue, that's positive. So we look on the right side here, 5.4%, 5.9% increase, 12%, 11%. So there's a lot of blue and there's not that much brown. If we go back to take a look at what was happening here, we saw that the rate of increase, the rate of positive median sales price growth throughout this year was increasing at a slower rate, and now it's kind of stabilized. Now it's going up. And that's because when we take a look at the chart, we see that this red line, which represents median sales price in 2022, was decreasing around this time. It was going down slightly. It wasn't completely crashing, but it was decreasing. Now, our orange line here, where we're at here in 2023, it's a much flatter line. Although it's been going down slowly, we see a little blip up here in October of 2022 with median sales price. And I think really it's gone down a little bit from its peak, the median sales price, but it's relatively stable. The bottom hasn't fallen out. It's basically staying the same. Now, let's get back to the overall story of this video here real quick and talk about new listings, and then I'm going to wrap things up. New listings. So this is what I wanted to talk about. New listings up slightly year over year by 0.3%. If we look, it only increased in about 14 metros out of the 50 metros that Redfin tracked. So here, this is Redfin Metro level data, includes the 50 most populous metros. So out of those 50, only 14 of those 50 saw new listings increase. And the top 5 were all in Florida. If we take a look here, Orlando, West Palm Beach, Miami, Jacksonville, Fort Lauderdale. So yeah, new listings are up 0.3% year over year, but they're not up everywhere. 36 of these 50 metros saw new listings stay flat or they saw them decline. So they're not seeing sellers jump out of the woodwork to sell their home right now. But these counties, these 14 metros are, and especially in Florida, I think there's some red flags for those markets if sellers are going to continue to jump out, and if builders are going to continue to bring inventory to the market in those areas, then they could be in a large risk of seeing prices decline. But anyway, thank you guys for watching this video. I hope you got something out of it. Let me know what you think in the comment section below. What do you think about new listings going up? What do you think about sellers cutting their price? I love learning from you folks. Again, all my contact information is in the description. So if you're looking to buy or sell a home anywhere across the country, reach out to me directly. I would love to help you. And other than that, thank you guys for watching, and I'll see you in the next video.